China seems to be in a favorable position regarding its oil supply amidst the recent disruptions from Venezuela, at least for the time being. Summary. The arrival of Merey crude to China is projected to exceed 600,000 barrels per day this December, according to insights from Vortexa and Kpler. Venezuela contributes approximately 4% to China's total crude imports. A seasonal decline in demand for bitumen has reduced refiners' interest in purchasing. High levels of crude oil stored on floating vessels in Asia have mitigated the impact of these changes. In Singapore, as of December 15, Reuters, the amount of Venezuelan oil already en route to China before the U.S. confiscated a tanker off the coast of Venezuela last week, along with an oversupply of crude oil in storage and lackluster demand, will likely limit any immediate repercussions for the Chinese market, as noted by traders and analysts. Following the U.S. seizure of a tanker off Venezuela's coast and the introduction of new sanctions affecting shipping companies and vessels involved with Venezuelan oil, exports from this South American nation have plummeted significantly. The possibility of further seizures has also made shipping firms wary about transporting oil from Venezuela. It's crucial to note that China, the world's leading oil importer, is the largest customer for Venezuelan crude, although it constitutes only about 4% of all crude imported by China. Recent reports suggest that arrivals of Venezuelan oil in China are expected to increase this month and next, largely due to a surge in exports over the past 4 months, combined with steep discounts on crude oil that can take up to 60 days to reach China's independent refiners, who are the primary buyers. The increase in Venezuelan oil shipments to China was anticipated due to the looming sanctions, stated Mukesh Sahdev, founder and CEO of the energy consultancy Analysts. He foresees that the effects of the tanker seizure and any subsequent sanctions will become more apparent by February. Analysts tracking tanker movements predict that December's arrival figures for Merey crude, a key export from Venezuela, will surpass 600,000 barrels daily. Vortexa estimates this figure at 664,000 barrels per day, subject to adjustment, marking a potential record high. Rising oil volumes in floating storage. The influx of Venezuelan oil coincides with substantial deliveries from other sanctioned producers such as Russia and Iran, resulting in increased volumes of oil held in floating storage across Asia. According to Kpler data, floating oil storage in Asia reached 71 million barrels last week, up from 53 million barrels at the end of October and around 33 million barrels in early September. This accumulation has intensified the downward pressure on prices, leading to even steeper discounts on Venezuelan crude. At least 1/3 of the approximately 650,000 barrels per day of Merey that was discharged in November in China is still looking for buyers, as reported by Vortexa analyst Emma Lee. Two trading sources indicated that the abundant supply of Russian and Iranian oil, along with incoming Venezuelan barrels, has alleviated current market concerns. Another trading manager from a regular buyer commented that while it might take some time to fully assess the impact of the tanker seizure on supplies, their company has started purchasing small quantities of Canadian TMX crude to safeguard against geopolitical uncertainties. Teapot refineries, key buyers of Venezuelan oil. Although Venezuelan crude represents a minor share of the Chinese oil market, for the independent teapot refiners who do purchase the Merey grade, alternatives can be expensive and not readily available. Industry sources indicate that only about 6 small refiners consistently buy Venezuelan oil. However, these companies could face significant costs due to potential supply disruptions and the need to find substitutes. Currently, China's demand for Merey is experiencing a seasonal downturn. Since late October, the most actively traded bitumen futures on the Shanghai Futures Exchange have been declining. Although the contract has seen slight gains over the last 3 sessions, the total increase remains below 1%. The extra-heavy Merey is considerably cheaper compared to similar grades like Canada's Access Western Blend and Colombia's Castilla, thus making it an appealing option for certain refiners.